All right, so today we're going to be looking at a simple moving average strategy. We're going to be using three different ones. We're going to be using the 200, the 100, and the 50, all simple moving averages. We're actually going to have a helper here, and this is called the Trend Zone Moving Averages Indicator. It is 100% free directly on TradingView. You can actually grab it. I put the very first link in the description. You can actually grab it right there, and you can get this thing right on your chart, just like how it looks here. I'm going to just kind of just show you very briefly how it works, because you don't need the indicator. You can just use three simple moving averages, but it does help. And so basically what you could do is it just colors the different backgrounds. And then there's 50, 100, 200. So it's very simple. You're going to see the yellowish if the 50. So basically we need the 50. So this is the 50. We need the 100 and then the 200. So we need it to stack just like this. So this is the 50. This is the 100, and then this is the 200. So when you have all three of those like that, you're most likely going upwards. And so that is the first thing. That's what we need to see. We want to see a nice little uptrend. I would definitely recommend this on higher time frames. So something like 4 hour, something like the daily. And so in this case, we're going to use the daily. And I have some trades here lined up that I want to show you exactly how this strategy would work. And so let's go ahead and go to the very first one. And so this is exactly, so this is what you want to do with this strategy. So the first thing is that obviously we want that uptrend, and then we want to be in this green zone. So you see this green zone. This is why I like the indicator. Makes it very simple, right? And so the green zone, basically, like I said, 50, the 100, and then the 200. They all need to be stacked like that. And so the next thing that is required is it pulled back into the indicator zone. And so that is, you can see this right here. While it says it is whatever that color is. I would say yellow, but it could be, could be identified as a different color, I guess. And then what we want, so that's basically the second step. And then the third step would be that a candle needs to close. So it comes down here. It can go, the price can come down here, whatever it wants to do, but eventually it needs to make its way back up. It needs to go up, and it needs to close above the 50 moving averages. So that's this one right there. If you can see that, that is the moving average. And let's actually go ahead and zoom up a little bit. You see how that whole candle that closed above it. Now that is a buy position. And so this is when so you can actually open it up. You can actually open up a position the next morning. So right at 9:30, as soon as this opened right here, if this opened down here, we're not trading it. If it opened down here, we're not trading it. It has to open above the 50 moving averages. Once it does that, after that pullback, you get in the trade. You do so in this case, you can do options. You can actually grab shares as well. But for such a small move, I like to target around 3%, and so not a ton. But when you're talking about options, that's a big deal. And so if you go for so basically the idea is here is you're going to go for 3%. So you're going to have a 3% target. So that's the TAR, is the target. And then -3, that is going to be the stop loss. And so basically those are the two that you'll be paying attention to. And you can actually use TradingView pretty easily enough to do this. So this is 3% down, 3% up. Let's go ahead and see how this played out. And so that would have been a winner. So right here, winner. So 1, 2, 3. So that's 3 days. This is like I said, this is the daily candles. So that would have been 3 days. That's a nice little winner. So now essentially when that happens, and again, this could continue to go up, but it also could go down. And so if you get 3% and you're happy with that, that quick little option, and I could actually show you what the actual what you would actually get with an option, depending on what you would do. You can use 30 days out at the money would probably be the best case scenario there, or the best type of option to choose there. But like I said, some stops could be a little bit pricey for that. And so you just really have to play around with that. But something like with Apple, I think that would be pretty affordable. Wouldn't be too much to ask for there. So let's go ahead to our second example. So this one would have been right here. like I said, I previously chalked these up. That way I could kind of show you guys real quick. So this would have been our next one. So again, it came up green. So there's our green zone, pull back into the moving averages, and then close. It did pull back very briefly, just one day, and then opened up above. And so that would have been our next trade. And 3%. So that would have been 1, 2, 3, 4. So that's 5 days right there. And boom, right to our, cash money. So that's just another win. Again, you can just continue to keep doing this until it stops working, essentially, until it comes back. So again, here's another one right here. So this one wasn't quite enough. And so we're looking to open above the moving average. And so this one right here, actually, I probably did the wrong. I mean, you could kind of play around with as much, you could do a lot of different things. So this one actually would have been that trade. So we would have got in right there essentially, because I don't like when people are like, oh yeah, look at my awesome strategy, and they cherry pick. So this would have been where we would have got. So that would have been the next entry. And so instead of 3 days, it would have been 1, 2, 3, 4, 5. And so that would have been 5 days. And actually now, since I'm looking at this actually looks like this actually opened. Let me actually zoom. So this is very close. Oh yeah. Okay. So it did. So this would have actually been, so we still would have won. So this would have been, or no, actually that would have been a loss. And so there we go. So that actually, this would have been, so yeah, if we go 3%, so that would have been a loss right there. And so I'm glad I actually caught that, because I didn't want anybody to be like, oh, well, you just, cherry pick that. So here we go. So that actually would have been a loss. So that's 2 days in, 3% down. So let's go ahead. And so now this would have been our next one here, 3%. So this would have been the winner. So there we go. So there we go. So we're still, so what is that? That's two wins, one loss, or three wins, 1 loss. Still not bad. Still pretty good. And we have this other one, that we were going to look at as well. But I just wanted to show you a couple examples just to kind of see what it would look like, just how you would trade it. So this one, yeah, you can see there, it went up well above, but it closed back in here. So we're not interested in that. This would have been our entry right here. And this was, just because I know this was a winner. So 1, 2, 3, 4, 5. So 5. So right there we were what? So we were 1, 2, 3, 4, 5. So 4 wins, 1 loss. Still pretty good. Again, if you're on the daily, this is from August all the way to February. So that's not a lot of trades, but they're good trades. They're pretty decently good trades there. And so again, you're definitely welcome to try different ways to trade this, because I believe this actually rocketed, or no, that one didn't. So actually, this is a great example of why you try to get out as quickly as you can. And so if you did something like this, where you're targeting a little bit more, this actually came down, and this was, it actually came down pretty hard. It's there. So yeah, so there's several different ways to do this, several different ways to trade it. This is the way I like to use with, these particular 3 moving averages. So yeah, so hopefully that was interesting enough. Again, you can grab this indicator. Hopefully this is simple enough, and we can maybe modify this indicator to take these trades, maybe to have like an little arrow. Maybe if you give us a comment below, see if this is something that you'd be interested in, we can maybe spend some time to actually put a little arrow here, because that probably would be helpful. And then if we are looking for downside trades, I have to go at a lower time frame, because there actually isn't a trade here. There might be some back here, but let's just go to the 15, because Apple's been down quite a bit. And so this one would have been, so again, remember, we have to have the 3 moving averages. So this is the 50. So again, this is the same way, only it's just flipped. And so 50, 100, and 200. So this is what you need to see. So this is where it crossed right there. So this technically would have been, Actually, no, we need to have a pullback. So did it pull back after? I mean, this hasn't really been. Let's actually go. Let's go back in time here. So it has been a downtrend. It actually has been downtrending. And again, this is a lower time frame. So again, I personally like this on the higher time frames. But again, this is for example's sake. And so let's look at this one. So yeah. So this was the pullback, and then this was where our. Let's go ahead and zoom up on this. That way, make it a little bit easier. Okay, let's go this one right here. And so actually, this would have been right where it crossed. And so this is the 50, 100, 200. So it crossed right here. It previously pulled back after the downtrend. And so right here would have been the trade. So that would have been where you would go for the downside. This is where you do your stop loss, and then obviously your target. So whatever your, if you want to do the 3%, you can still continue to do the 3%. Probably not that on the lower time frames. I like it on the higher time frames just because it's just a percentage that makes sense. Maybe target a little bit less and maybe go a little more aggressive on the option, maybe like a 7-day or something. But yeah, so, and again, you can do this on, crypto, you can do it on Forex, you can do it on stocks. I like it on stocks, but again, you can really use this strategy, however you would want with these, moving averages. These are very respected moving averages. And so it's just one of the ways that I like, to use these. So, again, if you like this, go ahead and leave us a comment, give us a little thumbs up. If you want this indicator, you can actually grab it right now. Like I said, go over to TradingView, put this thing on your chart, and start finding some of these trades. And you can even use this replay feature. I think this might be a premium feature on TradingView, but I really like to kind of go back in time and backtest strategies in different ways like that. So it's pretty cool. All right, guys, that's it for the video today. And yeah, like I said, if you want more of these kind of videos, let me know, because that's really the only way that we know. Leaving a comment, giving some feedback, definitely would appreciate it. All right, guys, I'll catch you in the next one.